The Fed15 podcast is presented by Serving Those Who Serve, a financial planning practice serving federal government employees and retirees all over the country. This podcast is for informational purposes only and is not intended to be taken as financial advice. All listeners should consult their personal advisors before taking any action. The opinions expressed by our hosts are their own and do not reflect the views, policies, or position of either Raymond James or Serving Those Who Serve. Securities are offered through Raymond James Financial Services, Inc., member FINRA SIPC. Investment advisory services are offered through Raymond James Financial Services Advisors, Inc. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services, Inc.
Welcome, everyone, to the Fed15 podcast, presented by us, Serving Those Who Serve. Each week, we'll discuss the latest news and info that Feds need to know in 15 minutes-ish or less. So whether you are a seasoned federal employee or just starting out, we've got you covered. So grab your coffee, your energy drink, your green juice, whatever it is, your eggnog. It's not too early. No, non-alcoholic because it's a work day. Or does McDonald's still have the eggnog milkshakes? Feel free.
I think they do. Holiday pies
Nice.
Now too.
And we will tell you what you need to know, but we may have missed. We are your host. I am the festive Dan Sipe, joined by the resplendent Katelyn Murray.
Excellent SAT word, Dan. I like that one.
Yes.
One of my favorites.
Yes. I am Thesaurus Rex.
I am, as many of you who are regular watchers know, I am festively clad. I have joined Dan Sipe in the Sweater Fest. Dan has been showing off his fabulous holiday sweaters all month. And being that this is our Christmas week episode airing on Christmas Eve, I have put my favorite holiday sweater on for you. This is a Star Trek holiday sweater. And it says, "Beam me up, Santa." And you'll notice in the little galactic themed kind of background here, we've got Santa's sleigh and the Enterprise.
Indeed.
So
absolutely.
This is my like one and done holiday sweater extravaganza. This thing gets a lot of mileage during the holidays.
Very nice. Very nice. So that makes me beg the question. We know Santa runs on magic. Is that as fast as warp?
I think
it's gotta
so.
Be. It's got to be. It does the whole world in the night. It's got to be.
It's got to be. Well, Dan, you also have you've been building up. You've been kind of like every week building up to your grand moment, the granddaddy sweater of them all.
And it is from National Lampoon's Christmas Vacation. I'll step back a little bit so you can get all of it. It's basically, if this is found 1,000 years from now, they will think this was an important archaeological moment in human history, because we've got it all. We've got Eddie's RV. We've got the truckster with the big tree ripped out. We've got the Marty Moose glasses. We've got the house. We've got the Rottweiler. We've got it all, because amazing. I will say this, let the hate mail begin. I think there are many elements of National Lampoon's Christmas Vacation that will resonate with almost every person who has done family Christmas gathering. Okay. And I'm not saying all of it, but I issue this challenge. If you watch that whole movie and you have had a regular history of family Christmas gatherings and you don't see anything, let me know, because I want to learn about your family.
That's too funny. I'm considering making a new holiday sweater purchase this year. I've had my Star Trek holiday sweater for a long time, but I think to commemorate, I'm not sure I've shared this on the podcast, but I know, Dan, you and I have talked personally about it. This year, for the holiday season, I am in a production of A Christmas Story. Regular listeners know that Dan and I are both big theater people, and I'm playing the mom in A Christmas Story, beloved holiday classic. It is one of my favorite, top all-time Christmas movies. And I'm thinking about getting a Christmas Story sweater to kind of commemorate the experience. So who knows? Next year around the holidays, I may have 2 holiday sweaters to share. Maybe one day I will reach Dan's level of festivity where I have one for every episode each month.
Well, I got multiple decades on you, so you got plenty of time for that, and I can't wait to see your sweater featuring the major award.
Oh yeah,
because It's Italian. It's fragile.
Oh, yeah. Yeah, for sure. Excellent.
So,
well,
of course, we are going to talk about Fed stuff. So what do we got? What do we got for this week?
yes, it's always Sweater Corner and then Fed News Corner on this show, at least this month. Today, we are going to be talking really, really actually good information here on today's episode about that I think is relevant for a lot of Feds about common TSP withdrawal pitfalls. So talking about how to get your money out of TSP and then also talking about FEHB. And I know folks have heard a lot about FEHB, especially from STWS throughout open season. You might have a little bit of FEHB PTSD, but we're going to talk through FEHB and really a comprehensive guide to navigating your health insurance options. I would encourage everybody, actually, if you haven't ever done, if you are one of those people, and no shame if you are, but if you are one of those people who during open season, you just let everything renew and you don't take any action and you don't really dig into it, it's fine. We're not going to, the good thing about a podcast is I don't have to ask you guys to raise your hands and identify yourselves. But if that is you, I would highly, highly, highly recommend hopping onto the STWS website to actually review the article Dan's going to cover here in just a few minutes in detail, because FEHB open season is a finite amount of time. Learning about and understanding your federal benefits is forever, right? That's something you need to be doing year round, open season or no. And if if open season got away from you, I know it's really close to the holidays. I personally would love for it to not be there, but I get it. It's year end. If it got away from you this year and you just let everything renew, take the time now to learn about this stuff. And if now is too busy, take the time in January, bookmark this article, come back to it in January. This is evergreen content, folks. Come back to it, learn what you need to learn, go into next open season prepared. Okay. But before we get there, let's talk TSP. TSP, one of my favorite topics to talk with Feds about. So we've got a great article on the blog this week about avoiding some typical TSP withdrawal pitfalls that can come up when you're trying to actually access your funds from TSP. So obviously planning out your TSP withdrawals is critical. You've worked hard, you've had a great career, you've retired, and now it's time to kind of turn the spigot on that TSP that you've been saving to for all these years. You've got options. There are 3 key ways to withdraw money from TSP. And again, here we are talking about retirees. We're not necessarily talking specifically about in-service rollovers at age 59 and a half. But 3 key ways to get money out. One is a full withdrawal. A full withdrawal obviously is going to remove the entire account balance. It's going to close the TSP because there's not a balance remaining in the TSP. And the upside is it gives you full control of that money that you pull out. You can reinvest that money into a brokerage account and keep that growing. The downside to a full withdrawal is the entire amount of the withdrawal, if it is pre-tax money, is fully taxable to you. If it is Roth money, it's not taxable, but it cannot be redeposited into a Roth IRA if you are doing a withdrawal. So let's be clear. When we're dealing with TSP, we've got 2 very important terms. They sound similar. I promise you they're not. There is a withdrawal, which is, hello, TSP, I would like to pull this money out and have a check made to me and deposit it in my bank account. And then there are rollovers. Rollovers are where we're keeping the money in a retirement vehicle. We're just moving the money from TSP retirement vehicle to an individual retirement account, an IRA. That's what IRA stands for, or a Roth IRA in the case of Roth money. But a lot of people think, oh, I'll just save to this TSP and then I'll retire and then I'll pull everything out and I can just put it in my bank, right? And that's super safe. Don't do it. Don't do it. A rollover is a totally different issue and there can definitely be some cases made for that. Now, in addition to that full withdrawal option, you can also do a partial withdrawal. You can withdraw a specific amount either on an annual basis or on a monthly basis or whenever you need it from the TSP to supplement your pension income. A lot of folks do this. You can kind of set it up like a direct deposit. You can pull out at least $1,000 every 30 days with a vested balance of at least $1,000 in the account. You do have to wait, and this is something important. You've got to wait 31 days since separation from federal service to set that up. Okay. So think about that. If you're going to need some money from your TSP to supplement income, be planning. Can we look at a cash reserve? Is there a brokerage account that we can pull funds from? How about that annual leave payout? A lot of our feds will use that annual leave payout that they get at retirement to kind of supplement income during that interim pension phase. So partial withdrawal is also an option. Something to be aware of with partial withdrawals, and we'll get into this more in a minute, taxes. We'll talk about it more in a second. All right. And then the third option that we want to look at are installment payments from TSP. Now, you've got two different options here. One is you can receive regular installment payments from the TSP based on your TSP balance. The other option is you can do something called annuitizing your TSP, which is where essentially your TSP balance is transferred to MetLife into an annuity, and that those funds are invested according to however MetLife sees fit to invest them. Typically, it's pretty conservatively. And then you receive payments either throughout your lifetime, or you can do throughout your life, and your spouse can receive remainder payments after you pass away, depending on how you structure that annuity. We are not huge fans of annuitizing the TSP and doing that option because you lose control of your balance. You don't get to say, you don't get a say in how your money's invested. You don't get to leverage equity funds because often with these types of annuity products, they are leveraging insurance products. They're leveraging fixed income, bonds, things that don't have that equity hedge. So, because if you think about it, MetLife's on the hook for paying you that money. They're not going to invest that money very aggressively because they don't want to experience downside volatility. So those are kind of our three different options for how to pull funds out of TSP. Here's some things you want to be aware of. Taxes. Remember, I mentioned earlier we were going to come back to the topic of taxes, and taxes are always factored into the conversation when we're talking about TSP. When you do withdrawals from the TSP for spending, I'm not talking about non-taxable rollovers. When you are supplementing income, whether it is lump sum, whether it is monthly installment payment, TSP will withhold federal tax. But for my folks who are living in states that have a state income tax, TSP will not withhold your state taxes. However, that money is absolutely taxable at the state level, depending on the state that you live in. Okay. So a lot of feds who are living in states with state income taxes where their TSP income is subject to that tax get a nasty shock after that first year of retirement if they're pulling out from the TSP because you come up with a big tax bill that ends up due for state. So be aware of that. You may need to make estimated tax payments on your own or adjust the tax withholding from your pension check to make up for what's not being held from the TSP distributions. We can also touch on early withdrawals. It's not one of the main three that I kind of mentioned up top, but early withdrawals are a thing. You can do early withdrawals from the TSP. If you retire, for most folks, if you retire at 55 or later, then you can pull from your TSP. This is a big thing when it comes to looking at TSP versus IRA. You cannot pull out of an IRA until 59 and a half. If you were retiring at 55 or let's say 57, popular age, right? You can pull out of your TSP for those 2.5 years, whereas you can't with an IRA or Roth IRA, something to be mindful of. If you retire before 55, which is kind of a rare case, but it does happen from time to time, you cannot pull from the TSP in most cases, okay? There are some exceptions to that rule. There are also hardship withdrawals, things like unpaid medical expenses, casualty loss, legal fees from divorce. There are certain times when you can pull out of the TSP for hardships. During COVID, there was another kind of opportunity to do that. In general, early withdrawals and those hardship withdrawals should be a last resort. It's going to take a big bite out of your retirement savings, bigger than the amount that you are even factoring in as a distribution. If you pull $50,000 out of your TSP in your early 50s, you've not just taken 50 grand out. You've taken 50 grand plus the earnings for the next potential 20, 30, 40 years on those funds, okay? And the tax savings that you would get from having it grow in a tax preferred account. So there's also RMDs, required minimum distributions. We've got a lot of content on that on the blog. I don't want to take up too much time talking about that here, but for most folks, RMDs will begin at age 73. There is sort of a built-in lever to increase that age to 75 starting in 2033. but RMDs are required minimum distributions. That's what RMD stands for. And they, there's an age at which the government says, look, you've got to send this pre-tax retirement money in pre-tax TSP or pre-tax IRA through the tax loop, right? We've not made any revenue on it. We've got to send it through. Here's the minimum you need to take out. It does not, and I want to clarify this point because I get a lot of questions about this. It does not mean this is an additional amount that you have to take out of your TSP on top of whatever you're already taking out. So for example, if your RMD is $25,000 a year and you're pulling out $2,000 a month, which would be $24,000 on an annual basis, you would only take out an additional $1,000 to satisfy that $25,000 RMD. And you may say, how do you come up with the RMD number? It gets calculated based on the IRS Uniform Lifetime Table. Or, if you work with a financial advisor, obviously they're able to calculate that for you as well. But it is on all pre-tax balances, whether that is in TSP or elsewhere in an IRA. So in general, you want to know your options before you go to make a withdrawal. And I highly, highly, highly recommend partnering with a financial professional who is qualified to guide you through those different options, because there is just so much that goes into managing retirement cash flow. It may seem simple. I promise you it's not. And you always want to optimize to make sure you have as many options as possible, both now and in the future. So that's that on that. Dan, I know we got a lot to cover with FEHB, so let's dive into our guide to navigating health insurance options.
Well, and especially it's when you're retiring. So for all the people that are sitting there going, why are you doing this after open season? Katelyn, they were so mean to me on Facebook. They really beat me up. And it's like, okay, yes, you're right. We did hold one after the close of the open season, but we hold them every month, which means we had 11 before that.
Yeah.
So I forgive you. I understand you didn't know that. So this is about retiring. This isn't about making decisions with open season. So here's the big thing. When you retire, you can take FEHB with you if you're retiring on an immediate annuity and you have had the FEHB for 5 uninterrupted years leading to retirement. That is enormous. That is fantastic. After the pension, I would say that is one of the biggest benefits that you get in federal retirement. So if you take nothing from this one, remember, make sure that you got those 5 years and you do an immediate retirement. Katelyn, yes, you're about to say something.
Oh, I was just we were going to go a little bit back and forth because, FEHB for me is number one benefit. I think it outranks the pension, actually.
I know. And it should be that for me because I'm a geezer and,
you're right.
I'm doing more health stuff. So a couple things you're going to have. Here's another thing. This isn't the article, but I'm going to throw it in there. The subsidy is the same when you're retired. Now, don't fall into a trap because we had somebody on a webinar get after us saying, I don't think it's the case because I just looked and the deduction's much bigger. Your deduction is biweekly when you're working and it's monthly when you retire. So don't compare the monthly to the biweekly. You're going to think it went up. No. It's the subsidy is the same in retirement, which is also fantastic. And you can keep family coverage if you need it, or you can drop down to self plus one. Or if you're two feds, you can each do a self only, which evidently turns out being less expensive in some cases than a self plus one, which I don't fully understand, but that's out there. And every open season, you have the ability to make that decision. The other thing that you're going to be able to do, and this is fairly new, only a couple of years old, you're able to consider a Medicare Advantage plan within FEHB, which means if you try it out and you don't like it so much, you have an easy way to go back to what you had before or try something new. Because one of the things, hands down, number one conversation for pre-retirees and retirees, what am I doing with Medicare? Do I have to enroll in Part B? No, you don't have to. You may want to, but it's an evaluation process. And I can hear the keyboards clicking right now. People yelling at me. Why are you telling me I have to? I'm not telling you have to. I'm telling you can. And it might be better for you. And if it turns out it's better for you, don't you want to know that? So be intentional about this. Get your information. And you know what? Every month we run webinars on this stuff. Okay. And we are publishing content right, left, and center. And as part of the webinars, you can sign up for a part 2. And we'll work through how you may want to calculate whether it makes sense for you. So outside of that open season, because you'll have an open season every year, just like when you work, where you make the changes, you would have to have a qualifying life event to make a change. So getting married, having a birth, that type of thing can happen, after you're retired. So yes, that's in there. How do you decide what you want to do? You want to assess your needs. Take a look at what your expenses were for the previous year. Understand your out-of-pocket costs. Think about these things through the year, not just in November and December. Okay? Take a look at your deductibles and your copays. Did you run right up to them every time? Think about the out-of-pocket maximums for the plan that you have. And that's where you're going to be able to evaluate whether you're in the right plan. Think about whether you're in a PPO or you're in an HMO. So are your doctors within the preferred network? So you don't want to have extra costs for going outside. Make sure your plan lines up with formularies for your prescriptions so that you're getting the best coverage that you can there. But above all, plan ahead. Plan ahead. One thing for which you need to be ready. Your premiums right now while you're working are coming out pre-tax. When you retire, they're going to come out after tax. So that is the difference. That doesn't mean the premium went up, but it's going to feel a little bit different. Not only are you going to go from biweekly to monthly. So that's going to be a little different bite. Okay. But above all, forewarned is forearmed. Okay. So the OPM FEHB website has a pretty good comparison tool. We've worked with it. Pretty decent. If you've attended anything with us, we're big fans of the folks over at Consumer Checkbook and our buddy Kevin Moss. They do a great job on that. And consider this a Christmas gift. If you put in the code STWServe, you get 20% off. So it's a good organization. It's a great tool. And as Katelyn mentioned, you always have the ability to sit with a planner. Okay. Someone who has experience in these areas. We have a bunch of them. So we'd be happy to be considered as that source. But make sure that the person with whom you are meeting really knows their way around health insurance, and not all of them do. I was meeting with a client yesterday that went to a competitor's webinar, and about 30 minutes into it, they were going, man, these guys don't know anything about Fed stuff. So it does make a difference. So that would be our one thought there.
Yeah. Yeah, no, absolutely good information. And like I said, this information is evergreen, folks. I mean, this is stuff that you want to be looking at. You should not only restrict your learning about FEHB to open season. Okay.
Absolutely.
It's complex. It is, a huge plan. And we really need to be kind of looking at it more often to get that comprehensive understanding. But I believe that is all the time and more that we have for today, folks. We'll be back next week to bring you all the latest updates you need to make informed decisions about your career and financial well-being as a Fed.
Yes, be sure to subscribe to this podcast on your YouTube channel and Spotify so you never miss an episode. And please remember to share it with your friends and colleagues.
Absolutely. And as earlier, definitely check out the blog at blog.stwserve.com. We do our best to summarize for you in these 15-minute episodes. I know the holiday season is one of the busier times of year, but really I think that every Fed's homepage on their internet browser should be stwserve.com, because we're pumping out content all week, every week for you guys, and all of it's free on those federal benefits. If you don't have that option, you can subscribe to our newsletter, The Weekly Serving, to get all the latest news for Feds delivered straight to your inbox every week. And I highly recommend that as a touch point. It's a once a week email, but it kind of keeps you in the loop, so you don't have to remember to check the website, all the time.
Absolutely. And don't forget about our live webinars every single month, featuring live Q&A. It's dynamite stuff. You're not going to get this quality anywhere else. A couple of upcoming ones you won't want to miss on January 7th of 2025. Yes, into the new year, from 11 till 3. It will be Understanding FERS with the incomparable Katelyn. And then a mere 2 days later, I know you're not ready to start thinking about this stuff, but we will have tax planning for federal employees on January 9th from 1 p.m. to 4 p.m., featuring the very comparable me. So it'll be a little step down from Katelyn to me, but I will be there for you.
Amazing. Yeah, I will be away the end of that week. So the 7th, you got to catch me on the 7th because I'm taking vacation on the 8th. I'm headed to the tropics. You guys know I can only do this winter stuff so much. So Dan will step in. Who knows? Maybe I'll get to feeling froggy and zoom in from the beach. We'll see.
Never know. You never know.
All right, everybody. Take care. We are wishing you a wonderful holiday season, whether it's Christmas that you're celebrating, whether it's Hanukkah, whether it's any number of the December and January holidays. It is a pleasure to serve you here at Serving Those Who Serve, from our team to your team. Happy holidays, and we will see you. We have one more episode before the end of the year, I think. Actually, we may. Yeah, we do. Okay. All right. So we will see you on New Year's Eve for the final episode of 2024. Take care.
So thanks for listening to the Fed15. I am the festive but entirely too excited Dan Sipe.
And I am the, probably appropriately nerdy, festive Katelyn Murray.
And we will see you next week.
Take care.